Mind Your Farm Business on realagriculture.com is brought to you by RBC Royal Bank. Hello and welcome to another episode of Mind Your Farm Business. I'm Lindsay Smith, your host of this episode, and first off, I want to congratulate you on being brave enough to hit play on something as absolutely scintillating as accrual accounting. I know it doesn't sound terribly exciting, and well, unless you're an accountant, it probably isn't. But I will tell you this much. Back in my university days, we had to run a farm, on paper of course, through a farm project. And one of the key things that we did was move the farm to accrual accounting. And I will tell you that many, many hours of sleep were lost in trying to make everything reconcile at the end of the year, but I learned a valuable lesson. Accrual accounting might seem a bit boring, maybe a bit cumbersome, but it really is an excellent way to have a snapshot of the true cost of production on your farm. Of course, it's much more than that, but it does give you a very real sense of the actual expenses that have to go against some revenue. So whether that's bushels per acre or pounds per rate of gain, you really do have one place where all of the costs associated with that production in a given year, and not a calendar year, but in a production cycle, really go against that production. And frankly, it's a pretty necessary thing to do. As you'll hear in this episode of Mind Your Farm Business, Dean Klippenstine of MNP likens accrual accounting to exactly that, a great way to measure the profitability on your farm. And it starts to make a lot of sense, or it starts to come into play when you start making some big picture decisions on your farm, like going after those last 2 bushels per acre of canola, or whatever the case may be. He also addresses that one little niggling feeling that an accountant telling you to move to accrual accounting is more about them than it is about your farm. But of course, that couldn't be further from the truth. And so I'm joined by Dean Klippenstine to talk about moving your farm from a cash basis to accrual accounting and how it might change the business decisions you make on your farm. Today, I'm joined by Dean Klippenstine. He's primary producer, niche leader with MNP, based out of Regina, Saskatchewan. Dean, today we're talking about accrual accounting and how it can really work for the farm. But, before we get going into the meat of that, what is accrual accounting? How does it differ from, say, what many farmers do already?
Well, the history is that the tax reporting, which is what most people believe their financial statements are for, is cash basis. And what that means is that I only have to pay tax on my farm when I liquidate my grain. So if I grow $100,000 of canola this year but do not sell it, my tax return shows 0 sales. What accrual accounting is adjusting that inventory to show on my financial statement that the same way I think about my farm. I always use the comparison. If I ask someone and they got off the combine and they're after harvest, and I said, "How was your year?" and they had grown 50 bushel canola, they would not tell me, "Dean, it was an awful year because I haven't sold any canola." They would say, "It's a great year because I grew 50 bushel of canola." Accrual accounting is simply taking that inventory into account on their financial statement to give them a better assessment of profitability on their farm. That's a simple, easy summary. Now, the complexity of that process is that grain gets carried over from year to year, inputs get purchased. So it's a relatively significant task to prepare it, but it's really getting the financial statement to reflect the exact same way the farm thinks about it, is that measuring the profitability of one individual crop year.
So walk us through then, how might looking at your farm through an accrual lens versus a cash basis, how might that change how you evaluate decisions that you make?
Well, if you use the model of a franchise, lots of good franchise businesses, when they get together with their, whether it's a McDonald's or whether it's a John Deere dealer or whether it's a GM dealer, when they get together, what they do is they compare profitability and analyze and try to, they don't do that just for the sake of their own enjoyment. They do it to understand their business and profitability better, and more importantly, react and make changes accordingly. So as a real simple example, the 40 bushel crop of canola on a farm I was actually just at earlier this morning, 40 bushel crop of canola makes that farm exactly $10 an acre. 40 bushel at $10 makes that farm $10 an acre. A 42 bushel crop on that farm makes them $30 an acre. So 3 times as profitable. Even if someone knows and understands based on their accrual financial statements how significant that impact does, it makes them really aggressive in pursuing those last 2, 3, 4 bushels. If you ask someone in the coffee shop, does 2 bushel an acre? My canola went 40, and the neighbor says, well, mine went a little better, but virtually the same. 42 and 40 are not the same. And so, but if you don't do accrual financial statements, you don't have the capability to really understand the significance of that. And it's really to drive and change behavior. We're not doing this for the sake of accountants. So that's the important part in my view.
And so in using an accrual system, correct me if I'm wrong, you're sort of, you take those costs that you know will have to be paid, whether they've been paid yet or not, and you put them against your production, right? I mean, to simplify it and to talk about it in this way, is it about drilling down to a more specific or a more accurate cost of production?
Yes, and it's the first step. We have producers who are now doing it on a field-by-field basis, and then the industry is a long way away from that. But at least on a crop-by-crop basis, to assist them in cropping decisions, to assist them in overhead decisions. So the accrual financial statement is just the very start of it, but at least it's a start in the right direction.
I want to come back to that point, but let's back up even one step again, and that there are those that sort of, you know, one of the things holding them back from potentially moving to an accrual system is sort of this underlying feeling that it's for the accountant and the tax preparer. It's not necessarily for the farm. But you're saying that's not the case. So how do you make that case for farmers? How do you sort of explain to them that there are benefits for the farm, regardless of what the accountant wants or thinks you should do?
Well, I always compare it. If you and I bought a $300,000 coin-operated laundry in Saskatoon, even though that's a significant amount of money, a significant investment, we would want to see, if you were an owner in that business, you would want to see the profitability, and you want a financial statement prepared to understand your investment, correct?
Yes.
It would be pretty difficult in Western Canada to find a farm that does not have a $300,000 investment. And so you are not an accountant. You don't enjoy paying accountants. And more importantly is if you could do the accrual financial statement yourself, you would. Obviously, that just makes sense. But you just told me that for your 50% of that investment in the coin-operated laundry, you want an understanding of profitability and return. So by natural extension, if you owned a farm business that had $1.5 million investment or $3 million investment or whatever, we know it's more than 300, you would want to understand the profitability. So the accrual process is not that massive of an extension from the tax preparation. It's just taking account inventory and prepaids into that, because most people are still having an accountant prepare their tax return or prepare their financial statement on a cash basis. I just want to see the whole industry take into account inventory and prepaids.
Right. And that is, so now we can circle back to sort of the transition to this. So, you know, obviously there's value in maintaining the cash basis. I mean, that's the world in which we live in. There's ins and outs and payments to be made and accounts payable and accounts receivable, all those sorts of fun things. But what would be some helpful first steps in someone who sees the value of moving to accrual accounting? How complicated can that be, or how easy can that be?
Well, a little bit depends on the record-keeping system, but it is not. It's a simple process, but it would involve, in 95% of the cases, having a professional accountant. So the person who prepares your tax return now, it's simply a matter of asking them, what would it take as far as process and as far as cost to prepare an accrual financial statement versus the records that you currently give me, which are simply tax prepared. So the record-keeping system is number one, and that's really in most cases, that's simply refining what you currently do for your personal tax or corporate tax preparation. And then making sure you keep track of things you've bought prior to your year end that are for next year's crop. Examples of that are inoculant, canola seed, fertilizer, maybe some chemical. And the other is simply tracking your grain inventory, which in many that you have on hand at your year end, most typically December 31st. Now remember, most people already have a significant amount of this information for their ag stability return. So it's actually very simple for the industry to go to full accruals so that information can be used by them, not just the folks at AgriStability.
Right. And especially when you sort of tally it up like that, these are all numbers or bits of information that probably exist somewhere. They're just not all necessarily brought into one place.
Yes, in a usable format. Because we also have to remember, lots of people say, well, I have a really good understanding of my finances because I write every bill and I pay every check and I deposit everything. Well, the problem is that in those circumstances, we don't actually bring the information into a simple, usable format to be able to make decisions. We're inundated with millions of pieces of data, but that doesn't actually help us make business decisions. We need it in a simple, usable form.
Okay. So what are there decent software options out there? Is it, can this be done in a relatively straightforward spreadsheet? What does that look like when a farm is using an accrual system?
That's an excellent question. An accrual accounting function or an accrual accounting financial statement can be prepared using any of the systems that are currently out there. And what I would recommend in 95% of the cases, that whatever they're currently using, they continue to use. They just get input from their accountant on how to use it. There's a bunch of good ones out there, but typically I would not have people switch at the same time they switch to this because there's too much transition.
Okay, and so in working with your clients, you work with grain producers and who obviously have inventories that ebb and flow and all these sorts of things. What are some of the biggest benefits you've seen for, in your everyday to a farmer or a farm that's moved to an accrual system?
Number one, the number one thing or improvement that I see get made is crop selection. So if you take your accrual financial statements and drive it down even into a profitability per crop, the number one is a real understanding of crop profitability, and it changes crop selection. Obviously within the realm of the physically capable crops to grow. If I live in Melfort, Saskatchewan, I said corn's the most profitable crop, it doesn't matter because I can't grow corn. But within the range of crops that I can grow, it simplifies the crop selection process if you drive it down the accrual profitability right into the per field. The second component of it is getting an understanding of your farm's break even. And that's important in two major components in the business decisions. It's my investment in new machinery costs. So if I understand my break even, I'm a little more cautious, or I have a better understanding on new machinery purchases. And second is, what is a reasonable land rent given my historic financial performance? So those are two really important or three really important things that I see actually change because of farms preparing accrual financial statements. We all remember the record crop that we grew at record prices and assume I can pay this much for land rent because I got that. But if my past year, 10-year financial statement history says I have never made more than that per acre, then I'm not going to pay X dollars for land rent. When there's 95% chance or 99% chance I'm not going to make any money on that field, I might as well golf for the year. So those are real, actual decisions that get impacted by accrual financial statements.
Great. All right. Dean Klippenstine with MNP, thank you so much for sharing your knowledge and your experience. And certainly the numbers are out there. Let's just bring them all into one place and start stacking them up against the production that they are used for, right? So wonderful. Thank you so much for your time.
Thank you.
And with that, we wrap up episode 8 of Mind Your Farm Business. Thanks for following along on this discussion of accrual accounting on the farm. I hope it was just as exciting as you thought it would be. As always, you can reach us at Real Agriculture on Twitter, or you can head over to realagriculture.com for past episodes of Mind Your Farm Business. Or as always, you can subscribe on iTunes.